California is no stranger to natural disasters. Earthquakes, floods and wildfires have all plagued the Golden State. Yet in recent years, a new kind of disaster has emerged, an insurance crisis. At the heart of this crisis is the FAIR Plan, California's insurer of last resort. Created in 1968, the FAIR Plan was designed as a safety net, providing basic fire insurance to homeowners who could not obtain coverage in the traditional market. However, what was once a stopgap measure is now struggling to keep pace with the state's ever-growing risk. The FAIR Plan, conceived as a temporary solution, finds itself increasingly burdened. The escalating frequency and intensity of wildfires fueled by climate change have pushed the program to its limits. Homeowners, particularly those in fire-prone areas, are finding it nearly impossible to secure affordable insurance through traditional means. This surge in demand has placed an unprecedented strain on the FAIR Plan, leaving it grappling with a rapidly expanding pool of insured properties and escalating costs. As the crisis deepens, the FAIR Plan's financial stability is called into question, raising concerns about its long-term viability as a safety net for California homeowners. The root of California's insurance crisis lies in the undeniable reality of climate change. Rising global temperatures have exacerbated drought conditions, creating a tinderbox-like environment across the state. Wildfires, once a seasonal occurrence, have morphed into year-round threats, growing in both frequency and intensity. The consequences have been devastating. Over the past decade, California has witnessed some of the most destructive wildfires in its history, incinerating homes, businesses, and vast swathes of land. These increasingly frequent and severe wildfires have shaken the very foundation of the insurance industry. The traditional models used to assess risk and price premiums have been upended. What was once considered a rare event is now commonplace, making it difficult for insurance companies to accurately predict future losses. As a result, many insurers have opted to reduce their exposure to California's volatile market, either by raising premiums to exorbitant levels or by refusing to write new policies altogether. The exodus of major insurance companies from California has further deepened the crisis. Faced with mounting losses and an uncertain future, several industry giants, including State Farm and Allstate, have announced their intentions to stop offering new homeowner insurance policies in the state. This retreat has sent shockwaves through the market, leaving homeowners scrambling to find coverage. As traditional insurers scale back their operations, the demand for FAIR Plan policies has skyrocketed. The agency, already grappling with the financial strain of escalating wildfire risks, now faces an unprecedented surge in applications. This influx of new policies, many of them located in high-risk fire zones, further exacerbates the FAIR Plan's financial woes. With costs outpacing revenue, the agency is left with few options but to consider drastic measures, including a potential bailout using public funds. The potential bailout of the FAIR Plan has become a contentious issue in California. Proponents argue that a bailout is necessary to prevent the collapse of the state's insurance market. Without intervention, they warn, homeowners in fire-prone areas could be left without any insurance options. This, they argue, would have devastating consequences, potentially leading to a decline in property values, an increase in foreclosures, and a mass exodus from high-risk areas. However, critics of the bailout argue that it would be a costly and unfair solution. They contend that using public funds to prop up a failing system would only serve to delay the inevitable. Instead of a bailout, they advocate for comprehensive reforms to the insurance market, including measures to incentivize insurers to return to California and to make insurance more affordable for homeowners in high-risk areas. The debate over the FAIR Plan bailout highlights the complex challenges facing California as it grapples with the growing risks of climate change. Finding a sustainable solution will require a multifaceted approach, one that addresses both the immediate crisis and the long-term need for a more resilient insurance market.